Everybody, Dave here in Freedom Investing, and today we're going to go over Apple. We're going to look at the Q3 earnings. We're going to look at the stock split news. We're going to go ahead and look at the chart, and we're also going to try to determine whether or not it's a buy, it's a hold, it's a sell. We're going to look over my portfolio and what I'm going to do and all that. So let's go ahead and get started. The information expressed in this video is my opinion and my opinion only. This information is for entertainment purposes only. Please do your own research. So Apple did post earnings and they blew out the quarter, and we had $59 billion of income. That was an increase of 11% over the previous quarter from last year. And EPS went up $2.58, which was an 18% increase. 60% of those revenues came from international. This is a pretty big quarter, considering in the past Apple has disappointed quite a bit, and we're in the middle of a pandemic. But I listened to the earnings call, and there was some things in there that kind of stood out this time. So let's go ahead and look at the actual earnings here. So products, we did have $42 billion, and then services $13 billion, and this is the quarter from last year, so that's a substantial increase from last quarter. Excuse me, that was a substantial increase from last year's quarter of June. So in total net sales of $59.6 billion, and we had gross margins of $22 billion. And then net income was $11 billion for that quarter, so that was an increase from last year's $10 billion. If we split this out by the products here and geographical locations, Americas had a pretty big substantial increase over previous quarter of last year. Europe, China, Japan, and the rest of Asian Pacific here all had an increase over last year's quarter, June quarter. So that's pretty amazing. I wonder what caused that. So we look down here at the product categories. We had iPhones, which had an increase from the $25.9 billion from last quarter of 2018, or year-over-year quarter increase. So, and then Mac, we had an increase. iPad, we had an increase. Wearables, we had an increase, and services, we had an increase. So overall, every single one of those product categories had an increase. So Apple is killing it during the pandemic. I don't really know. I mean, they did talk about some things on the earnings call, but nothing, was really specific. Could just be that people are staying home. People are buying more MacBooks, they're buying different phones, they're upgrading phones, they're getting a stimulus check or something like that, and they're upgrading their phone. So wearables was one of those ones where they did say it declined, but it was still a double-digit increase. And then services here, we had an increase as well. The music subscriptions and the Apple TV and all that stuff, and everybody's staying at home, so some of these categories are shifting around, and that's just the way it goes. Sometimes it's a winner, sometimes it's a loser, but this quarter they did have an increase in iPhone sales. Now that was partly in demand by the iPhone 11, but it was also a big part of that increase had to do with iPhone SE. And I guess on the earnings call they kind of mentioned that part of that had to do with the no interest financing or the low interest financing, on top of the fact that they're allowing some trade-ins as well. So that kind of gives it a competitive advantage over the iPhone 11. Not to mention the iPhone SE is smaller as well. It's $300 less, I think it is. So, and people are just taking advantage of that. So, iPhone 12, we're going to talk about that here in a second. But so they did have an increase in iPhone sales in the previous 6 quarters, apparently, that the iPhones were on a decline. So iPhone sales going up, I caught them by surprise, and they were quite surprised, and I think they said that the iPhone SE had quite a bit to do with that. So here we are looking at the FinViz chart for Apple. We'll just kind of go over some of the numbers here. We got a market cap of $2.03 trillion. That's pretty much the largest company in the world at this point. And it didn't take them that long to double from 1 trillion. I remember hearing him talk about 1 trillion, 1 trillion, 1 trillion, and then now it's like, here we are at 2 trillion already. It's crazy, absolutely crazy, in the middle of a pandemic. So Income, $58 billion. We had sales, revenue of $278 billion. And dividend is 0.66, unfortunately, because it's had a big run up since the stock split news that you're going to get less than 1% on it right now. 137,000 employees. We had a forward PE of 32. It's not bad. I mean, for Apple, it's probably acceptable, you know, compared to like a Tesla that's out there that's sitting over 1,000 right now on a PE. This is pretty reasonably priced if you really look at it. Gross profit margin is 38%, operating margin is 24%, and profit margin is 21%. We have a beta, which is pretty high at 1.23. And we had a pretty recent run up here ever since the earnings and then the stock split news. And we're going to talk about the stock split news here in a second, but let's go ahead and look at the Seeking Alpha information here. So we're looking at the Seeking Alpha information. We did look at the dividend earlier. It was 0.65. I wish they would just, double that, take some of the free cash they have and, take some of those profits they have and double it. They got enough cash. Why don't they just double it at this point? We got a payout ratio of 25, which is reasonable, so they can double that payout and not worry about the growth here too much. We do have a dividend growth of 8 years and the CAGR is 10.49. I wish they would just double it at this point. Apple is a growth, kind of an in-between a growth and a dividend, but just double it. You make enough money, double it. How hard is that? So there's a capital structure for Apple. Market cap is 2.16 trillion, which we looked at the other page. And we got the total debt is $122 billion. And that's quite a bit, but for Apple, that's not very much. Any other company out there, that would be a kind of a red flag. But with Apple, we're at $2 trillion. They make a ton of money. They have $93 billion in cash laying around. And as I said in the last video, that cash can be split up between short-term investments and cash, and we can kind of look at that on the Wall Street Journal page here. We got short-term investments of 72 billion, and then we got cash only as 28 billion. Now that was from 2019, so they may have used some of that cash up, or they may even move some of that money out of short-term investments. But this, could be a bunch of different things here, but bond or something like that. And just to let you know that that cash is just not made up of just straight cash that they have inside of a bank account. Here's the stock split news, and this thing's been on fire ever since they announced it. You had to be a on record on August 24th to be able to be qualified for the stock split. The stock split date is August 28th, which is tomorrow, Friday. Today is August 27th, which is a Thursday, and the actual first day it's going to trade under its new price will be August 31st, and they're going to do a 4-for-1 stock split. So that means most likely, I have a feeling this is going to be around 500 or so when it splits, which would put the stock at about 125 per share. To be notified of future videos, don't forget to like and subscribe and set that bell notification. So where is this stock going? Where did I buy it? And am I going to hold on to it? Am I going to sell it? Am I going to render some profits? I am up big in Apple. Let's go ahead and take a look at my account right now. So we're looking at my Schwab account here, and this is when I bought Apple. And if you don't recall, or maybe you do recall, March 23rd was the absolute low in the market. All right, now I had picked up Apple, 19 shares that day, and I just, it was luck, right? I mean, we made a new low that day, we had a new leg down, and I just decided to dump, 19 shares into Apple. That was $4,100, and then later in April, I bought 4 more shares, and then again in April, I bought another share. So that brings my share total up to, 24 shares or so in that one account. I do own it in another account as well, but there's only 1 or 2 shares or something in there as well. So I did pick that up on the absolute low, so that means I am up pretty big in this stock. So if we look at my dividend portfolio here, let's go to current portfolio. So we're already, let's see here, Apple, and right now I'm up over 116% on Apple with a $6,700 gain on it. And that's with the original $4,000 or $5,000 investment. My cost basis is $55.89, so that's a pretty substantial increase. And obviously, you know, if I knew that we were going to have, that was going to be the low in the market, obviously I would have put in more, right? I mean, it's just the way things go. You don't know if it's going to be the absolute low. I still think I did a pretty good job, considering this, you know, portfolio was a lot smaller at the time as well. I just, you know, went lump sum into Apple, and you know, it paid off. So a lot of that had to do with the stock split in this blowout quarter as well. But what am I gonna do now? I'm up 116%. The split news came out, stock is way up. And you know, if we look at that chart there, so this chart here, it's kind of got an ascending channel going on. We're at the top. In my opinion, that this is probably going to be right around 500, right on the dot when it splits. So that would put it about 125 after the split. There is some catalyst out there that's probably going to make me keep the stock. And some of those catalysts are iPhone 12 and 5G coming out. I think they're going to announce that or possibly do the event in October. They may do it in September, but I think it's scheduled for October from all the news that I heard. So here's, you know, 2020 planned events, new products and software coming in 2020, in the fall of 2020. And they talk about a bunch of other stuff in here, but the ARM-based Macs, the Apple Silicon is another one. So they're getting away from the Intel-based chips. You know, that's bad for my Intel stock that I just bought. If you haven't seen that video, go ahead and take a look at it up here. And I have a pretty big stake in it. And you know, here we are, Apple cutting out the Intel chips eventually. But they are still supporting the Apple Macs, the Apple Intel Macs, Intel-based CPU Macs. So don't worry about that. If you just bought one, you're still good. They're going to still support it for quite a while, so don't worry about that. But that is a catalyst going forward. They can control that process. You know, they can hopefully get a better profit margin out of it. Not to mention, it's supposed to be performance-wise, it's supposed to be better as well. I think they already run it in their iPads and all that stuff. They also did talk about doubling their revenue for services, and that happened 6 months ahead of schedule. So that's another catalyst going forward. Another catalyst that they mentioned also was being fully carbon neutral from their supply chain, entire supply chain, by 2030, and that's pretty big. So that's a pretty good one. iPhone 12, like I said, 5G. I think they're going to announce that in October 2020. So that's a pretty good catalyst. So I think all those things alone right there is enough for me to probably hold on to the stock and not sell it. I have a feeling that after the split, it's just going to go up more. I remember the split back in 2014, and look at, you know, where the stock is now. So it's already up to 500, and that's 6 years. And you know, I mean, there's people out there that probably been waiting around, even though there's fractional shares in almost every single, you know, broker out there. Maybe there's still some people out there that just could not own one full share or wants to own one full share. And you know, there's people with smaller accounts, and it doesn't even dawn on me that people still just want to own one full share, and the fractional shares just didn't really feel like they even own a part of Apple. So I've never been in that boat. You know, so it wasn't until somebody brought it up to my attention that maybe that's a concern for some of the smaller investors out there. Now, you know, that bringing to light kind of makes sense. So I can see what they're going through. You know, is it going to help the stock? Probably. It really doesn't change anything fundamentally for the stock at all. But people, you know, there is people out there that don't realize that the stock is not really cheap based on the stock price. So they might actually think, like, this is a deal, I got to buy it. It was just 500 a couple of months ago. I need to buy the stock. It's only 125. And unfortunately, that's just not the right thinking, is incorrect. So this really doesn't change anything fundamentally for the stock. And I do think that this actually is a good thing. And you know, we got Tesla did it as well, and maybe Amazon will do it, maybe Google will do it, maybe Facebook will do it, and there's plenty of other stocks that could do it as well. Maybe CMG, Chippetal might even do it as well. So You know, when I was growing up, I think it was maybe in the 80s or 90s, you used to hear about the Big Apple all the time. So if you're maybe in your 40s, 50s, or 60s, you might have heard of the Big Apple, and that's just what they called New York City. And I think it even dates back to 1920, the Big Apple, the Big Apple, the Big Apple. And it's like, well, that's nothing to do with Apple. Right? Apple came out, what, in the 70s, I think? So it had nothing to do with Apple, the Big Apple. And they finally got rid of that whole saying and got away. I mean, it's just, you'd have to be probably a certain age to understand that's what it used to be called all the time, but it's just a little bit of tidbit of news there, and I didn't realize it had nothing to do with Apple until I looked it up recently. So it was kind of interesting news. So I'm gonna go ahead and hold on to my shares, and I have no intentions of selling my shares. And matter of fact, I'm probably going to get up to 100 shares and start selling some more covered calls against Apple now. So going forward, I'm going to hold on to it, and I think that this is great for the stock. I think it's going to go up on this, and with that, we'll go ahead and end the video here. So go ahead and like and subscribe, and go ahead and leave a comment below if you have any questions or comments. We'll see you in the next video. Thanks for watching.